Hi, my name is Fan Yang, and welcome to another edition of CMS Forex News. Today is Monday, October 13th, 2008. A weekend of synchronized government actions quelled the panic and restored a sense of confidence in the solution to the hobbled financial system. Stocks around the world rallied in response. On Friday, investors were not impressed by the G7 plan, which called for public funds to recapitalize banks, but was too broad. Over the weekend, the IMF director said policymakers around the globe now have coordinated, detailed, and comprehensive plans to resolve the credit crisis. The first sign of this plan came as European leaders met in Paris and agreed Sunday on a deal to guarantee loans between banks through 2009 and allow governments to buy stocks in distressed financial companies. On Monday, the ECB, the Bank of England, and the Swiss National Bank said they would lend unlimited amounts of dollars to banks to facilitate lending. UK banks unveiled plans to raise over $73 billion in fresh capital, most of it set to come from the UK government in exchange for shares. Germany, meanwhile, said it will set up a fund worth $135 billion to bail out its financial sector. The U.S. Treasury said it was seeking to buy equity in healthy financial institutions as a part of a multi-billion-dollar program to jumpstart the flow of credit. The pound-yen pair, a good indicator of risk sentiment, gapped higher to open Sunday trading, fell to test the 168 level, then rallied 700 pips to trade near 176 by noon Eastern. The announcements from Europe and the UK helped restore a sense of confidence and risk appetite. The FTSE 100 was up more than 7%. The euro-yen pair was about 400 pips higher than its low on Friday. The euro-Swiss franc, a favorite for European carry trade, recovered from its steep fall on Friday, recovering to levels seen during Thursday's trading. At the European Open, the pair hit 1.55 before receding to 1.54 and into calmer trading in the New York session. The DJ Stock 600 was up almost 10%. The euro-pound pair saw a second session in favor of the pound. In today's trading, the pair slid from its intraday high near 0.7970 to trade below 0.78, and by 1 p.m. Eastern was about 270 pips lower than its high on Friday. That puts the pair back at its level in the beginning of last week. The euro-dollar pair opened much higher than it closed on Friday afternoon and rose to test 1.3680 at the New York Open, which was effectively wiped out the pair's losses on Friday. However, the dollar strengthened the New York trading, bringing the pair down about 180 pips from its high. Investors seem to be reluctant to sell too many greenbacks despite the rise in U.S. stock markets indicates risk appetite is back and dollar hoarding may be on the decline. With the Dow Jones Index up more than 550 points by 1 p.m. Eastern, the dollar-yen pair too recovered from its fall on Friday. The pair was testing short-term resistance at 101.25 in early afternoon. Technology stocks were up as well, with the Nasdaq up 6% at that time. Bond markets were closed today for Columbus Day. In a final market highlight, the US dollar-Canadian dollar pair fell back to the 1.16 level after climbing as high as 1.21 on Friday. Crude oil prices rallied near 4% Monday morning, moving in line with the world equity markets. Crude futures had tumbled 10% on Friday to close at 77.70. Today, the UK releases its BRC retail sales monitor and the RICS house price balance. Japan posts a measure of prices that corporations pay for goods and its measure of household confidence. Australia, meanwhile, reveals a report on business confidence. Overnight, the UK reveals data on consumer, retail, and housing prices. Germany and the Eurozone post their ZEW economic sentiment indexes, and the Eurozone also posts its industrial production. That wraps up today's Forex in the News. Join us again tomorrow right here at cmsfx.com.